Hello and welcome to From the Helm. I'm Grady Wolfe. Nickel Industries is an ASX-listed company, ASX NIC, which owns a portfolio of mining and low-cost downstream nickel processing assets, which produce nickel for the stainless steel industry and the electric vehicle supply chain. The price of nickel has been in decline since 2022's peak. However, Nickel Industries has experienced a rally over 20% over the last 12 months. Currently, Bell Potter's senior resources analyst, David Coates, has a buy rating on Nickel Industries. To discuss the company's recent rally and outlook over the next 12 months, I'm thrilled to be joined today by Nickel Industries Managing Director Justin Werner, who's in Indonesia at the company's headquarters. Justin, thank you for joining us today.
Thank you for your time and the opportunity to talk here today.
Now, can you give us a perspective on the global nickel industry and what BHP's decision on the industry has been recently and the impact on Nickel Industries of this?
Look, certainly the supply response to the change in the nickel industry has been, I think, swift and much faster than people actually expected. Currently, you have over 450,000 tonnes of nickel that's either come out of the market or is at risk. So that's a significant number. And as reflected by obviously BHP going into care and maintenance for the foreseeable future. I think that those cuts will probably continue. And we've really had a complete change across the nickel complex in terms of the cost base, which has been driven by Indonesia, and the fact that producers that currently sit $17,000-$18,000 a tonne or more previously were able to make margins, but in this market they're loss making, and so they've had to exit.
Now, can you tell us about the mining of nickel in Indonesia versus mining of nickel in Australia, like the differences in quality, grade, mining practices, government regulations, etc.?
Yeah, so we tend to think of Indonesia as what the Pilbara in Western Australia is to iron ore, or the Middle East is to oil and gas. There really is nowhere else globally that is significantly well endowed with nickel as Indonesia. And to put that into some sort of perspective, our mine has 3.7 million tonnes of contained nickel metal, with, we believe, upside to actually significantly increase that. A mine in Australia of 250,000 tonnes of nickel would be considered a big mine. So it's just the sheer size and scale of the nickel that exists in Indonesia. It's also, because it's laterite, it sits at surface. So the exploration is very cheap. It's very easy to identify. Whereas most of the Australian ore bodies are sulfide. They can occur at depth. It's expensive to drill. Requires a lot of sustaining capex to be able to mine. So there is a significant difference between the geology of the nickel that's hosted in Indonesia and the geology of the nickel that's hosted in Australia.
Now, nickel has come down since the 2022 peak. Can you tell us about the outlook for the commodity from your point of view?
Yeah, look, we still remain relatively bullish on the outlook. We have seen a slowing in EV penetration rates, and so I think that has led to sort of a bit of a softening of the price. There has been a rapid expansion in Indonesia. But coming back to the earlier point of the 450,000 tonnes that's recently come out of the market, if you look at new projects, and this is class 1 and intermediate nickel, that are funded and under construction in Indonesia, there's currently only about 300,000 tonnes of new capacity that's coming in to bridge what's currently at risk or has been taken out. So we have a positive view moving forward. We think stainless, which is still where the majority of nickel is used, still robust demand in China, and we see great opportunity in India as their stainless consumption per capita increases, and we are also seeing increased use of nickel, particularly in alloys, and that's being driven by space and aeronautical industries, geothermal industries, wind turbines, and even use of nickel alloys in nuclear power. So yeah, I think across the broad segment of the nickel market in the different markets, we still retain a positive view.
Now, more specifically, can you tell us an update on Nickel Industries, your operations in Indonesia, any results out recently, and where you're heading over the next 12 months?
Yeah, so we are now the largest listed pure diversified nickel producer globally, and we've been able to achieve that in a little over 5 years. We are now diversifying our business. Historically, we've been a producer of iron, which is a product that really it can only be used in China for stainless steel. We are now transitioning the business into a different technology called high pressure acid leach. That technology should allow us to unlock superior margins, a much lower carbon intensity, and a diversified customer base. So we're seeing strong interest from a lot of potential consumers, all ex-China. So Europe, North America, Japan, and Korea. So it's an exciting time for the company as we transition into that battery metal space. And that's where we see significant opportunities for the company.
Now, why do you think Nickel Industries has rallied 20% over the past year, but the rest of the industry has been in decline?
So the end of last year, we reported a record quarter for EBITDA, over $130 million for the quarter. And that was against the backdrop of a lot of Western Australian producers struggling. This quarter, well, not quite as good. We still managed to report $79.5 million in EBITDA, again against the backdrop of BHP announcing that it was closing down, and therefore there's some nickel coming out of the market. IGO announcing that it really only has sort of 2 to 3 years of mine life left. And so that effectively only really leaves one nickel producer standing in Australia, and that's not just playing out in Australia, but it's playing out in other parts of the world where we're seeing that decline in nickel production. But I think we've been able to demonstrate that even through a soft pricing environment, our margins and our EBITDA is very robust. Given that we're now, as I said, the largest listed producer, when there is a around in the nickel price, we think we're extremely well positioned, given our volumes, given our position on the cost structure, to really take advantage of that and to see increasing EBITDA moving forward.
Thank you for joining us today, Justin, and I hope you, as our audience, enjoyed this episode of From the Helm. If you did, why not subscribe to our YouTube channel and sign up to become a Bell Direct client to ensure you stay ahead of all insights and market commentary.